In June 2026, SpaceX is going public at a valuation of 1.75 trillion, raising up to 75 billion in a single listing. That's bigger than Saudi Aramco, bigger than Alibaba, bigger than any IPO in the history. And everyone is debating why it's worth so much. Is it Elon Musk's brand? Is it Starlink? Is it the AI ambitions? They are all wrong. The real answer is vertical integration. We all know about vertical integration, but have you ever seen it done in such a masterclass level? So this whole picture includes three entities, and there are within entity level vertical integration, and there are cross entity level vertical integration. Let me show you how. In SpaceX. So Boeing designed planes but outsourced the engines to GE or Rolls-Royce, landing gear to suppliers, electronics to contractors. SpaceX, on the other hand, built 85 to 90% of everything in-house. Engines, structure, software, launchpad, all of it. That single decision reduced launch cost from 54,000 per kilogram in the space shuttle era to 2,700 per kilogram today, a 20 times reduction. Compared to ULA, SpaceX's biggest competitor buys its engine from Blue Origin. It structures from multiple contractors. Every one of those suppliers adds a bit of profit margin, all those adding up to additional cost. Besides that, vertical integration also enables innovation specifically for SpaceX. SpaceX lands its booster vertically and reflies them. One Falcon 9 booster has now flown 30 missions instead of being thrown into the oceans after just one use. This cut down the cost dramatically. But here is the twist. The rocket business itself is loss-making. 657 million in operating losses to be exact. So why would Elon still double down on this? No big deal that the rocket business is bleeding money. Why? Elon Musk has another cash cow. That's the Starlink, the cash cow satellite company. Every Starlink competitor, Amazon Kuiper, OneNet, Huge Labs, has to pay a launch provider, be it ULX, Ariana Space, SpaceX, at market rate to put their satellite in orbit. To put things in perspective, Amazon would have to launch 3,200 satellites to build their constellation. At market outsource rate, it's estimated to cost up to 20 billion to build. Not Starlink though. Due to vertical integration with SpaceX, Starlink can pay at cost. That's not a pricing advantage, a structural moat. Result, very lucrative business because of the price advantage. We are talking about 10.3 million subscribers, for 11 billion in revenue and 4 billion in operating profit, and growing at a 50% rate per year. Starlink is also a stable major customer for SpaceX. SpaceX launched 134 times in 2024 versus A just launched about 5 times. So when you divide your fixed costs, the engines, the facilities, the tooling, over 134 launches instead of 5, your unit economies are completely different. So, linking to AI. So you would have thought all is good so far, right? SpaceX plus Starlink makes strategical sense. Combine both together, it's still 3.7 billion in operating profit. Should have no big issue. But Elon dropped a bomb in February 2026 and announced that SpaceX is going to merge with xAI, creating what the S1 filing now calls SpaceX AI. This shocked the market because the AI division had 3.2 billion in revenue but an operating loss of 6 billion and a capital expenditure of 12 billion. That's 3 times what SpaceX spent on the entire space segment. Why would Elon want to drag down the IPO by adding a liability? But is it truly a liability? Or is it an asset in development? Starlink's 4.4 billion in profit is essentially being funneled directly into building the AI supercomputer, the Colossus and the Colossus 2 data center, housing over 200,000 NVIDIA GPU, about to train xAI's AI model. It's another debate on the overall competitiveness of Grok versus other AI model, but it really doesn't matter. Why? Because this infra enables SpaceX AI to play real estate game. The S1 revealed that Colossus is operating at just 11% of its capacity, and Anthropic, a direct competitor of Grok, is paying SpaceX 1.25 billion per month to use Colossus compute capacity. That's 15 billion in contract AI revenue. Huge potential and a structural advantage. Now you see the whole picture. Cheap rockets linked to Starlink revenue driving AI infrastructure. Each layer provides strategic advantage to the next. The whole thing only works because you own everything along the vertical integration model. And this a masterclass that I promised in the beginning. But here is the part that blew my mind. This vertical integration is not just a business advantage, it's an enabler for a science fiction turns into reality, the Mars endgame. That's something particularly interesting in SpaceX IPO filing. A legally binding SEC document state that Elon Musk's 583 billion compensation package only pays out if SpaceX establishes a permanent human colony on Mars with at least 1 million population. The word Mars appears 63 times in the prospectus. That's not a vision statement, it's actually a contractual trigger. And when you see that the vertical integration of the three entity lines fall into places neatly to support the mass colonization center, solar power AI server in space serve double duty. They sell compute to the Earth customer to pay for the bill, and it is actually the most energy efficient way to run the AI center. And ultimately, they serve it as the local autonomous compute backbone for Mars. Is it worth $1.75 trillion at 93 times revenue? You're not paying for what SpaceX earns today. You are paying for a business model that's almost impossible to replace. Because when you control the whole vertical chain, from engines to satellite laser link to AI model on top of each other, you don't just cut costs. You build a structural advantage that cannot be copied. You have just watched a masterclass in vertical integration. Whether that's worth $1.75 trillion, I'll let you decide. But if you're a business owner or operator, the real question is, how are you building your own structural advantage? Hi, I'm Karen. This channel is to decode business model, growth strategy, and investment idea. Follow and subscribe if this is your cup of tea.